Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Tuesday the 22nd day of July 2014, and this is the daily report for gold and silver. Besides silver, we do have the precious metals complex moderately lower today. Gold showing a loss on the day of about $5.50. As you can see, current print on the screen, roughly 1307. It has had a low this morning of 1301 even and a high of 1317.30. So it has had quite a range. And as I said, current print puts it off roughly $5 on the day. Silver is actually the only metal showing higher pricing in the precious metals complex, that is. Currently trading up roughly 3 cents on the day. You can see that with this little green candle here, this doji-like candle. Low on the day, 2067. The high, 2117. And current print on the screen is 2094. 2104. That would be your bid-ask spread for the day. So it is at the $21 mark. More on silver towards the end of the show. As you can see, market is currently trading roughly 1307. And as we talked about before on the last couple of shows, we do have different levels of support and resistance coming into play and into the market. We have identified 1305 as an area of support. We did breach that support as the market came down and tested 1300, 1301 being the low. Let's try to put this in as straight as possible. On the resistance side, we've also identified 1317. That is the 50% retracement. It is a retracement from this most recent correction. And that is where we pegged the high of the day, just at about that area right here. So we've seen the market pretty much trade within the range, but trade within the range under some pressure. Now, as we look at this market, I've gone ahead and pulled up a daily chart, this being the cash market of gold. We still have our support and resistance levels in here. But the other thing that we are seeing is when we consider the last couple of trading days, we have had alternating candle color, but the real pressure has absolutely been to the downside as we see some of this safe haven premium that exists in gold waning, as there is a belief that things are kind of settling down, both in the Ukraine as well as Israel and the Gaza Strip, the current conflict over there. I tend to differ on that opinion, but that's neither here nor there. When we look at this market, there's a couple of points that we really need to focus in on. Of course, any continued downside pressure would certainly change our overall view of the market. It really does need to hold 1300 and 1305, which is this particular band right in here, for us to really believe that our current trade that we have on, our long position in gold and silver, should bear some fruit. However, this is a real tricky point right here, and we certainly want to see if the market can hold that particular area. Now, assuming the market does not hold, it's going to come in and probably stop us out. Our stop is sitting just under 1300. So we have one direction in the market. Assuming that the market begins to find support and track and trade higher, we have 1317, 1318. That's an area that we've identified. And then I believe our real resistance right now stands from this most recent peak here that happened April to call it the mid-April point, in which we saw the market trade roughly to 1330, 1332, of course, is a 76% retracement. So that's our particular band that we're looking at. Should we see this market begin to track higher, that's really what our target is, and my belief is that we have the opportunity to see that market move to this point. But above that point is going to take a little bit more than technical buying in the market. It's going to take a renewed belief in safe haven asset that we're seeing in gold and that premium that is being added to it. So one of the studies that we have been looking at to determine whether or not we've had any kind of pivot or change from this overall bearish sentiment, we talked about this over the last couple of days, and that's the fact when we look at the outer prong of this particular study, the Andrews Pitchfork, and I refer to the zero prong here. Of course, we have the 100 here and our handle, which comes off that record high of 1900. This has been in play for a good period of time, 2012 here, 2013. So all of 2013, we've really been part and parcel to watching this market erode. We had a 30% decline in value. But for the first time, we genuinely saw this pop above this cascading channel line that moves down. Even with this most recent dip, you can see it's still trading above this. And my sense is even with lower pricing, meaning coming to the zero prong but bouncing off, that would still be in line with the fact that we have moved out of this longer term bearish channel and could be moving into a new bullish cycle. Of course, when you have these pivot points, these turns, they're not so easy to discern when you're in the heat of battle, so to speak. One technical study definitely pointing towards the potential for lower pricing is our Japanese average chart. This is our daily chart. We just looked at it, but it was in standard candlestick format. We have converted it. When we look at that in this format, we could have something like an A, a B, and then we're going into a C. If that's the case, then we would be in store for the market to even come and maybe test 1291. That would be a flat, or even a lower low, possibly as low as 1280, although we don't have any supporting evidence of that besides the fact that we have gone red in here, but nonetheless, red we have gone. And we talked about the fact the other day that even though we had these green candles showing some uptrend in the market, they were ever so slight and not showing us any kind of real strength. We talked about different rallies that you have seen in the marketplace. For example, this rally, which was pivotal candles, lack of lower wicks, solid candles to the upside, as opposed to this start of this rally in which we had our pivotal candle, but for the first couple of trading days, we still had these small bodies. However, we had small bodies. We did not have a red candle in there as we do now. So that, in terms of comparison, wouldn't be appropriate either. So traders, there's no doubt we could see some pressure in this market based upon the technical studies that we're looking at. And lastly, we'll take a look at the silver market. We do have silver trading a couple cents higher. I believe that that is in sympathy with the equities markets, which is also trading higher today. And of course, silver being a highly used industrial component or industrial precious metal, it would makes sense to see it track higher as equities tracked higher. We are maintaining our long positions. We're certainly maintaining our stops. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.